$177.18. That is the number staring back at you from the screen right now, down 3.07 points, or roughly a 1.71% decline on the day. If you are checking your portfolio on this quiet post-Thanksgiving Friday, you might be feeling that distinct tightening in your chest. The market expectation was simple. NVIDIA smashes earnings, the stock goes to the moon, and we all retire early. The reality? We got the earnings beat, a massive one. And yet, here we are, watching red candles form on the chart while the rest of the holiday shoppers are out fighting for flat-screen TVs. It feels counterintuitive, almost insulting to the logic of good news equals higher prices. But if you look closer, past the headline numbers, and into the plumbing of what is actually happening in the semiconductor space today, this drop isn't a failure of the business. It is a structural shift in the narrative, a changing of the guard in how the market values AI infrastructure, and it is creating one of the most complex setups we have seen in years. Most people are reacting to the price action. We need to react to the story underneath it, because that is where the real money is moved, lost, or made. Let's be real about what is happening on the trading floor today. The volume is lighter than usual because of the early market close for the holiday, but the selling pressure is specific, targeted, and institutional. If you are looking at the order flow on an advanced dashboard like the one from Interactive Brokers trading platform, you will see that this isn't just retail panic selling. This is a recalibration. The rumor mill is working overtime, and the catalyst isn't the earnings report we saw last week. It is the whisper growing louder about a potential alliance between Meta and Google. The report that Meta might be looking to shift some of its massive $100 billion infrastructure spend toward Google's custom TPUs instead of strictly relying on NVIDIA's GPUs. That is the tension. The expectation is that NVIDIA has a monopoly forever. The reality is that the biggest customers are actively trying to become competitors, or at least diversify their supply chains. When you see a 1.71% drop on a day when the news flow should be quiet, it is usually the market digesting a risk that isn't fully priced in yet. Now, take a step back and think about how this affects the average investor. You might be sitting there with your Fidelity Investments app open, looking at your cost basis, wondering if the top is in. It's a valid question. When a stock becomes the entire engine of the S&P 500, any sputter feels like a stall. But context is everything. Just days ago, NVIDIA reported revenue of $57 billion for the quarter. $57 billion! That is up 62% from a year ago. If you were running a lemonade stand and you increased your sales by 62% in a year, you would be the king of the neighborhood. But Wall Street is a cruel master. They didn't just want a beat, they wanted a blowout of such epic proportions that it would justify a $5 trillion valuation. They didn't get perfection, they just got excellence. And in this market, excellence is an excuse to take profits. This is the classic buy the rumor, sell the news dynamic playing out in real time, magnified by the liquidity vacuum of a holiday Friday. Consider the psychology of the retail trader right now. You have millions of people holding this stock in their Robinhood stock trading accounts, perhaps owning fractional shares, watching every tick. They see the price drop to $177.18, and they feel fear. But the hedge fund manager using Fidelity Wealth Management Services sees something different. They see a company that just confirmed demand for its Blackwell chips is off the charts, and that cloud GPUs are sold out. The disconnect between the stock price action, down, and the fundamental business reality, booming, is the opportunity gap. This is where the patient capital separates itself from the nervous capital. The drop we are seeing today is largely technical. It is a retesting of support levels around the $175 mark. If that level breaks, we could see a flush down to the 160s, which is where the real institutional buy orders are likely sitting, waiting to snap up shares at a discount. Speaking of platforms, if you use Schwab Intelligent Portfolios or any automated investing tool, you might notice some rebalancing happening in the background. As NVIDIA's weight in the index fluctuates, these algorithms automatically trim or add exposure. Today's selling could be exacerbated by these passive flows. It's not a human making a decision that NVIDIA is done. It's a line of code executing a command because the volatility triggered a threshold. This is crucial to understand. You are not just trading against other people. You are trading against math. And right now, the math says the stock is technically overextended in the short term, even if the long-term fundamentals are pristine. It's the same pattern we have seen with Tesla stock in the past. Massive run-ups, followed by confusing, grinding corrections that shake out the weak hands before the next leg higher. Let's dig into that Meta Google fear again because it's the anchor dragging on the price today. The fear is that inference, the act of actually using the AI models, doesn't require the heavy-duty NVIDIA H100s or Blackwell chips in the same way that training the models does. If Meta can run its Llama models on Google's cheaper custom silicon, that eats into NVIDIA's future margins. That's the bear case. But here's the counter-argument that the market is ignoring today. The pie is getting bigger. We're moving from a phase of building the data centers to sovereign AI, where entire nations are buying infrastructure. The UK just announced a massive investment. Japan is doing the same. NVIDIA is no longer just selling to 4 tech bros in Silicon Valley. They are selling to prime ministers and presidents. The scale of this demand is hard to comprehend, and it provides a floor to the stock that custom chips from Google simply can't erode overnight. If you're using a SoFi investing platform, you are likely looking at the implied volatility on the options chain. It has crushed since earnings. The premium has come out of the calls, which means the easy money speculative frenzy has cooled. This is actually healthy. A stock cannot go up 3% every day without eventually imploding. What we are seeing at $177.18 is a normalization. It is the stock taking a breath. It is boring, and boring is good. Boring allows the moving averages to catch up to the price. It allows the earnings multiple to compress slightly, making the stock more attractive to the value-oriented funds that have been sitting on the sidelines. This is the consolidation we need to build the base for the next move toward $200. Think about the broader sector rotation. Today we are seeing weakness in semiconductors, but look at where the money is flowing. It is moving into software, into areas that haven't participated as much in the rally. This passing of the baton is normal in a bull market. You don't want NVIDIA to carry the entire market on its back forever. That is Atlas shrugging waiting to happen. You want breadth. So when you see Apple stock holding up or other sectors bid, it's a sign that the market is healthy, even if your favorite chip stock is having a red day. If you are managing your own money through an individual brokerage account, this is the time to zoom out. Don't look at the 1-minute chart. Look at the weekly chart. The trend remains upward. The higher lows are still intact. I want to pause here and ask you a serious question about your own conviction. Comment below how many shares of NVIDIA you currently hold, and more importantly, at what price point would you be willing to double your position? Are you waiting for $160, $150, or are you buying right here at $177? Let me know in the comments, because the sentiment of the retail investor is often a leading indicator of where the bottom might be. Let's switch gears to the product itself, the Blackwell architecture. Jensen Huang, the CEO, confirmed that they are shipping these chips now. The engineering challenge here was immense, connecting 2 dies to act as one giant chip. There were rumors of overheating, rumors of delays. All of that turned out to be noise. The product is working, and the customers are lining up. Microsoft, Oracle, OpenAI, they are all effectively fighting for allocation. This scarcity dynamic gives NVIDIA pricing power that is unheard of in hardware. Usually, hardware is a race to the bottom on price. NVIDIA has turned it into a luxury good. They are the Hermes of silicon. You don't buy an H100 because it's a bargain. You buy it because you literally can't compete in the modern economy without it. This moat is wider than people give it credit for. Software ecosystems like CUDA lock developers in. Even if Google's TPU is cheaper, if all your developers know CUDA, you're going to stick with NVIDIA. It's the same reason people stick with Windows or iOS. The switching costs are too high. However, we must address